there may be off-takers. At times, they may not be taking the power. That is where the difference between the plant availability and load factors comes into picture. Well, if you see basically in the monsoon seasons, the power utilization in the agriculture sector almost becomes zero, which is currently at 40%. And therefore, the state grid, which mostly almost 300 megawatt is taken by GEB, is coming down to almost 100 megawatt from 300 megawatt. And secondly, the second off-taker is basically Essar Steel, which consumes the power of almost 600 to 700 megawatt. Depending upon the production schedules of the steel, that also decides the plant load factor. That's why it is slightly lower compared to availability factor.
I would say that that's not really impacting Essar Energy. What Essar Energy is required to do is to deliver plant availability. The contracts which we have signed is based on plant availability, and I think the plant availability factors which are there of 97, 98% is pretty much in line with the best in the sector.
That's James Brand from Deutsche Bank. Just a first question on forestry clearance. There seems to be, as you highlighted, a general problem in terms of delays to forestry clearances across India. Could you just go through what the causes have been for those delays and what the problems have been? And in terms of the domestically owned coal assets, how confident are you in the case of delay to your own production that you can secure additional coal linkages from Coal India? And could you just comment on what the cost impact of that would be?
Sure. Firstly, these projects, the coal assets which have been allocated to us and many other companies, we've made significant progress in getting all the necessary environment and forest approvals. And apart from the forest approvals, all of the environment approvals are now in place with us. As regards the forest approvals, there have been some delays, which across the spectrum of coal mines in India. The government, as we mentioned earlier, the government has set up now a committee to specifically go into these delays and recommend a way forward for getting these projects back on track. I'm happy to say that our projects once were also visited as part of this program, and due to the significant progress which we have made in these projects, and we showed you some visuals of the status and the investments which we have made in these projects, we do believe that we are in a very favorable position to get these approvals in the near future. Having said that, there might be a time lag between when the coal mines are going to ramp up to full production and the power plants which may actually start, which are on schedule and which may start a little bit earlier than the coal mines reach full production. There is a program which the government has got, which is of giving a tapering allocation from Coal India to meet such contingencies. We have applied under this, and we are, again, as part of this committee, we are hopeful of getting that tapering allocation, and that will see us through this temporary period of timing mismatch. The coal allocation which is given by the government is at a price of about $20, a little bit more than $20. Currently, that's the price which coal is delivered to most of the power plants in India, and I don't think that will have, therefore, a material impact on our financials going forward. So all in all, we are aware of this. We are fully dealing with it. We are addressing the issue in totality, and we do believe that we will have the necessary approvals for forest going forward.
Hi, it's Henry Morris from Goldman Sachs. I just had a question on your upstream strategy. For future opportunities, where regionally are you choosing to focus? And then following on from that, perhaps as a group as a whole, what sort of budget, do you have a budget that you think about in terms of future acquisitions? And then finally, from that point, what level of kind of gearing would you be happy to go to, given your significant capex plans as it is, if you were considering future acquisitions?
Well, firstly, on the E&P front, I think we've followed a very conservative strategy. If you look at the prospective reserves which the company has of close to 2 billion barrels and about 150 million barrels of 2P reserves, the investments which we've actually made to get to that have been very, very conservative. I think we've totally invested about $160 million in total to get to this stage. Even the recent acquisition of the 4 coal bed methane blocks in India is again at a very low cost. It's basically a profit share with the government, and the initial investments are quite modest. Having said that, one of the strategies of the company is to look at for E&P resources outside of India. We've got certain oil blocks in Nigeria. We've got some blocks in Vietnam, and some blocks in other parts where we are looking at exploration and production. We are not going to comment on what might happen in the future, because that's I would say at this point speculative. But we continue to look at low cost E&P resources with our stated goal of having at least 30% of the crude we need in oil and gas equivalents for our refinery.
Sorry, I know we have a comment just in terms of the gearing level.
Absolutely.
Yeah. I mean, I think, so just extending Prashant's views there, the company is still in very early stages of its own development. We've got to focus on delivering the power and the oil refinery projects. And at the end of those 2 phases in power and phase 1 of oil, the business should be generating very, very large amounts of operating cash flow. I think once we're into that space, that is then the time to start sort of thinking about sort of setting the customer gearing limits that an entity might sort of put in place. Some sort of net debt to EBITDA levels would probably be the appropriate level. But that's probably sort of a couple of years away. And the question on opportunities, it depends on what sort of opportunity, how you finance it, what cash flows that brings, and the timing, in particular, in the stages of development of our cash flows.
Thanks very much.
Okay. Do we have any more questions from the audience? No. Okay. Do you want to wrap up?
Yes. So I want to take this opportunity to thank all of you for coming here today. As we have presented to you, this has been a very eventful 6 months for Essar Energy, with the IPO, with the listing, and with joining the FTSE 100. I think we've made significant progress in the pipeline of projects which we are executing, both on the power space and in the oil and gas space. And our current operations in our existing operating assets of our refinery and power are pretty much in line with our overall projections. And we look forward that on the next 2 to 3 years' time in reporting on the completion of all of the expansion which is currently online. With those comments, I want to thank you very much, and